Hello, and welcome to Loose Change Investing, where we're going to learn not to fear the market and how to invest small sums of money to play in the stock market. If you're here, I hope you're fascinated by the stock market, maybe even a little bit afraid of it, but I hope to change that. We're going to discuss several ways to invest small sums of money. Back in high school, I learned that you had to have a stockbroker to be in the stock market. But later I learned that's not the case. There are several ways to invest that don't require a stockbroker. These are direct stock purchase plans, something called a DRIP, which is dividend reinvestment plan. There's several mobile apps, low-cost stockbrokers, and of course traditional stockbrokers as well, which we will discuss at some point very briefly, and sometimes as a comparison to our other options that we have. This is going to be a way to build up a nest egg. This is also a great way for parents or grandparents to give their children or grandchildren money to save for the future. These are definitely not get-rich-quick schemes. So what are some of these methods? Well, some companies offer what's called a direct stock purchase plan. This is a way where individuals can really just simply send money to the company, and they will record values of stock that you've purchased with that money. Now, they don't do this on their own. They don't have staff at their own office that do this, not as a rule. Typically, a transfer agent are the ones that hold the stock and manage these accounts for these companies. We send them money, and hopefully for no fee at all, they invest the money that we send them. And then when we sell, they sell for very low fees. Some of these programs allow for automatic withdrawals from your checking accounts or savings accounts. You can also send checks, but the fees vary on whether or not those will be accepted and invested that way. A lot of these companies allow you to invest for as little as $25 and some even only $10 a month. We'll go through and investigate many of these that have what I would like to call no-load direct purchase plans. These are the ones that have no charge for purchasing the stock for you and only charge a trading fee when you divest yourself of the plan. The second method we're going to talk about is something called a dividend reinvestment plan, or a DRIP. It's very closely related to a direct stock purchase plan, but some of these actually require that you own a full stock of the business before you're allowed to reinvest dividends. Usually not a problem. We can sometimes invest in those stocks through the direct stock purchase plan, or we can use a low-cost broker and then transfer that stock from what's called street name, which we'll learn about later, to our name itself, and then transfer that into their dividend reinvestment plan. A method that has recently developed is something that the younger crowd will get excited about, and that is mobile-based investing with no fee or low fees. There's several versions of these investment plans, Robinhood, Acorn, to name a couple. We're going to investigate several of them as a way to do some investing. One method that we'll look at is not for the faint of heart. It's called OTC investing. This is where small companies that can't quite make the financial commitment to the documentation and things like that that are needed to be traded on the formal stock boards of the New York Stock Exchange or NASDAQ or something like that. These are often called pink sheets, and they're less stable businesses, but sometimes there are little gems there that can be invested in. We will also look at mutual funds and exchange-traded funds. These two are basically the same thing, except in the way that you get money into and out of these two pieces. What they do is they wrap up several different businesses in the same group, or possibly of the same size, or some general collection of businesses that seems to make sense. And they bundle those as a single item to be purchased. In a mutual fund, these investments are made at the end of the day at the close, after the mutual fund has decided what its price is going to be for that day. The exchange-traded funds are traded much like stocks, but still represent a collection of businesses instead of just one business as a typical stock does. And finally, we'll at least chat about brokers. There's several types out there. One type is a discount broker, maybe like TD Ameritrade, ShareBuilder, and things like that, where you can trade online for $7.95 a trade or something like that. But then, of course, there are also traditional brokers where that you go sit down, talk to them, use their services for what they know about the businesses, and find out their take on which stocks to invest in. Again, please be aware these are not get-rich schemes. They would probably be more appropriately labeled get-rich-slow schemes. We're doing something akin to a savings account, really, but we're just looking for a better rate of return. And I'll show you what that means later in the series as well. But doing this type of investing creates us basically a savings account with a really good rate of return. The idea is to find a long-lasting, increasing value stock that has paid dividends for a long time and hopefully increase those dividends as well. Certainly not reduce them, but at least kept them steady and the same. Now, something about me. I am not a financial advisor. Please take this information as something interesting that I'm telling you about a hobby of mine. Please base your own investment decisions on your risk level. Also be aware that my real retirement savings is safely in a 401k somewhere with someone else managing it. This is just a little hobby that I have that I like to see how I can investigate companies, find out how big they are, what they stand for, what they've done in the past, and try to find an interesting place to invest a little bit of my extra money. I'm a civil engineer. I just like to do things myself, and that's why I'm running this channel and doing my own investing. So come join me on this journey with Loose Change Investing. Good day. Save that loose change. Invest wisely by investigating before you invest.